Good morning, firms, Your Excellencies, ladies and gentlemen. Hope you're all doing well. This is Econoscope, your front row seat to the global economy. Global markets are shaking. Here is what it means for Nigeria. Europe is waking up nervous. Wall Street is jittery. Tech stocks are wobbling. And Nigeria, we are right in the middle of the ripple effects. If you trade stocks, follow oil prices, watch the Naira, or just want to understand why your cost of living feels global, stay with me. Let's dive in. Europe opens lower. Central Bank, Super Thursday. Today, Thursday. European markets are starting the day in the red. The FTSE DAX CAC 40 and Italy's FTSE MIB are all opening slightly lower as investors brace for a central bank bonanza. Today, four major European central banks, the ECB, European Central Bank, Bank of England, Riksbank, and Norges Bank, are announcing their final interest rate decision of the year. Only one is expected to move rates. But here is the key point. Here is the kicker. Markets hate uncertainty more than bad news. Why this matters for Nigeria? When Europe tightens or delays rate cuts, global investors become cautious. That often means less foreign portfolio inflows into emerging markets like Nigeria, more pressure on the Naira, and tighter dollar liquidity. Now, let's look at the second point, which is BP CEO's shakeup. BP CEO's shakeup. Oil markets are watching. Now to energy, and this one hit close to home. BP has appointed Megonel as its new CEO, replacing Moray Auchincloss after less than 2 years. That makes 4 CEOs in 6 years at BP. Markets are watching closely because leadership instability at a global oil major raises questions around strategy, capital discipline, and energy transition priorities. For Nigeria, BP may not be Nigeria's biggest producer anymore, but global oil sentiment affects Brent crude prices, government revenue, FX inflows, and ultimately budget funding. When oil giants wobble, oil-dependent economies feel it faster. Yes, and it ripples down the shore of Nigeria. Now, the third point, U.S. inflation, tech sell-offs, and global jitters. U.S. inflation plus tech sell-offs equals global jitters. Overnight in the U.S., markets were cautious. Investors are waiting for November inflation data, expected at 3.1% year-on-year, the first inflation report since the U.S. government shutdown ended. At the same time, AI and semiconductor stocks sold off sharply. Oracle fell by 5.4%. Broadcom dropped by 4.5%. Nvidia and AMD also slide significantly. Why? Concerns over the huge capital costs behind data centers powering artificial intelligence, AI. So, big lesson. AI is powerful, but it is expensive, and investors are starting to ask hard questions. Now, the ripple effect for Asia, from Asia to Africa and to Nigeria. That U.S. tech sell-offs didn't stay in America. It rippled into Asia-Pacific market overnight, pushing stocks lower. And this is how global markets work. U.S. tech falls, Asia reacts, Europe opens weak, and capital becomes cautious everywhere. Now, for everyday Nigerians, stock market volatility affects foreign investment in Nigeria. Oil price uncertainty affects government spending. dollar strength affect import prices, fuel, food, and inflation. Yes, it does affect them. So here is the big question. As global money becomes more cautious, is Nigeria positioning itself as a safe destination or just another risky stop? This is where we stop. Follow Econoscope, comment, like our content, and reshare. See you in the next video. Bye.